Okay, great.
Okay, welcome everyone to today's session. Today is the last session of this module as of now. Remember that we're going to have the policy piece of this module later on in the semester because we had to postpone due to the availability of the speakers. The presenter today, module director.
It's working.
Sorry, go ahead.
Can you see me
now? Not yet.
Oh, I can see myself now.
I just sent you a webcam request.
Yes. Sorry to interrupt you. I just got excited.
Now
Yay!
Great. Great.
Let me
Awesome.
put that here.
Okay, so now we really are ready to get started. So as I was saying, we're going to have a postponed section of this module, which you will not need in order to complete this module assignment. It's a piece on policy and arts education. We're going to have that later on in the semester. You can see the academic calendar as to learn when the exact dates are for those sessions. But now, Eva, the group already knows you, so why don't you take it away anytime that you're ready?
Okay, great. Sorry, I'm just going to position this webcam a little bit better. And then
the external webcam?
Here. Sorry. Okay, here we go. Okay, I think that should work a little bit. Okay, there we go. Sorry. All right. Hello, everyone. It's great to be with you again. I was able to watch Leah's last session, and it seems like you've just had really remarkable learning with her. So I'm so pleased, and I'm excited to build on the work that she's done with you to, finish out this module this week. I want to just kind of briefly go through, where we've been and where we're going to go today. Wonderful. So I just want to see my screen. Great. So at the beginning of our series, we began with really high-level concepts in financial management for nonprofit and social enterprises. We talked about how core activities or core programs should really drive allocation of funds, and how budgets can serve as a tool for refining strategy and operational goals. So sort of this like two-way street between the program side of your enterprises and the financial side. Leah then covered some different business models for social enterprises that you might consider, and really using those different models as a way to think creatively about revenue models for your projects. So how do other artistic entities structure their earned and contributed revenue model, and how can you maybe think a little bit outside the box of where you're currently thinking about how to raise enough resources for your enterprise. In Leah's second session, she really tackled some key strategic issues. She talked about admin and program expenses, direct and indirect costs, marginal costs, so how you can really start to think about maximizing income for your particular programs, like what it would look like to do a particular program or a concert several times, and what are sort of the marginal costs associated with that, and can you actually earn more by doing things multiple times. She talked about kind of ratio analysis and how funders are going to look at the split between your administrative costs and your program costs, and really kind of what story a budget tells to a funder. And I think those are just really, really important concepts that in last year's program we didn't really have time to delve into, so that both those models, but also these really important sort of big picture ideas about the financial model that you choose for your organization, and sort of what implications that has for your operation, but also what implication it has for funders and other partners that you bring on board. So I think, today we're going to finish out with some more brass tacks, some real tools that you can use to set up financial management accounting practices for your enterprise. I'm really aware that for most of you, you may be kind of the the main organizer for your enterprise. Maybe you have a few other team members, but it's a pretty small group. And this may be in addition to a lot of other things that you're working on, whether it be school or, other artistic endeavors. And so you need systems in place that are going to make it easy for you to track the flow of money for your enterprise, and to have really sound practices that not only will help you in your operation, but will also inspire confidence for funders and for other partners who see that you're taking this part of your operation really seriously, that you have, clean and easy to read and understand information, and that you really have a grasp of, what the financial picture of your enterprise is. So that's really where we're going to head today. And I just want to start by kind of leaving it open for a couple minutes of questions. Anything that may be lingering from my first session or from Leah's intermediate sessions that you want to kind of have in the discussion as we go through today's session. Okay. It sounds like we maybe don't have any questions. Pedro, you're not seeing anything in the chat box either?
I'm not seeing anything in the chat box either.
Okay, great. And I apologize, I'm just a little under the weather, so I apologize for being a little bit stuffed up as we go along. But please interject as always with questions. If anything's unclear, if I'm talking too quickly, if I'm moving too fast, or if just a question, does come up that you'd like to address, please do. Great. So the goals for this session, as I mentioned, are to gain exposure to key concepts and terms in accounting. I think one of the biggest hurdles to learning about and adopting accounting practices can sometimes be the terminology. There are a lot of very technical terms that can sometimes be confusing. So I just want you to become more fluent in that language, and then also to collect the tools and strategies for instituting accounting processes for your enterprise. Before we dive in, I want to bring us back to the big picture slide that we kept returning to in our first session. We, in our first session, really talked about establishing programmatic agenda and forecasting expenses and fundraising goals based on that agenda. And the third piece that we really didn't address is like, how do you actually track the expenditures and funds raised through accounting practices? So that's like, I think, the missing piece of the puzzle. And that's where we're going to spend most of our time today. But the important thing to note is that this is such a critical piece of the puzzle, because if you don't do this effectively, then you actually don't have the data. You don't have the information you need to recalibrate your programmatic agenda, to reforecast the expenses, and to be effective in your accounting going forward. If you don't know what you've spent and how much you've brought in and where it's all gone, you can't make smart decisions about how to tweak things for future. So that's where accounting comes in. It really gives you the raw data that you need in order to make those strategic decisions and moves. So just at the most basic level, we're going to define what accounting is. I think probably most of you know, in a general sense, but just to make sure that we're really all on the same page. It's a systematic and comprehensive recording of financial transactions pertaining to a business. So that's really like the work, right? You're recording, you're making sure that you have a record of all the transactions, all the money going in and the money going out related to a business, whether that be a nonprofit, a social enterprise, for-profit business. It cuts across all. And it also refers to the practice of summarizing and analyzing those transactions. So accounting is not just getting the raw data, it's actually analyzing it and making smart decisions and gaining insight into your operation based on that data. So it's not really enough just to collect the raw data of money in and money out. It's also really the practice of looking at that data and asking yourself how it informs your operation. It's always, in larger organizations, a key function. So generally there will be a finance team or department, accounting is a key function of that department. For you, working, generally in very small teams, kind of in a startup environment, you will be responsible for this. But my hope, in addition to you being more comfortable and fluent in these practices, is down the road, hopefully, as your enterprises grow, and maybe you bring on professionals for whom this is really their deep area of expertise, that you'll have kind of the depth of knowledge and fluency in the language of accounting that will enable you to work effectively. Because at the end of the day, budgets and accounting practices, it's about collecting financial information, and that financial information drives decision making. And so if you are not comfortable reading that information and analyzing it for yourself, then it's hard to act upon it. So that's, I think, why this is such a critical module, and one that's really more than just an operations, boot camp. It's really more about, how financial information can drive strategy. Great. So I'm going to go through fairly quickly some basic vocabulary that I think is really important for you to know. These are words that maybe some of you are familiar with. If you've worked in nonprofit organizations, you probably have heard these terms kind of passed around. But these will be kind of key terms and concepts that you come across as you read more about accounting practices and as you engage with them yourself. So the first important term is accounts payable. So this is money owed by your organization to others. So this is money that's going out of your organization. And then accounts receivable is money owed to an organization. Okay, so this is money coming in. So if you think about it in terms of your basic budget, accounts payable would sort of be in the expense category, and accounts receivable would be in the income category. So these are kind of the two sides of your budget. Another important term is accrued expenses or liabilities. So this is a case where you may have budgeted for something in a particular budget cycle, but won't actually pay for it until another cycle, another yearly budget cycle. So this could include maybe accrued salaries or tax or accrued rent, but it could also be for other types of materials that may be on loan that a payment is coming down the road. This is an important term to understand, and just that it can really impact your budget if you have money that's sort of on the books that you owe, but you haven't paid in a particular cycle. It's just really important to remain mindful of those expenses that are going to come, in a future cycle. These are alphabetized, by the way, not necessarily kind of grouped by, by, I guess, theme. So please, I'm jumping around a little bit, but I hope, that this is helpful, because we'll be using these terms as we go along. The fourth is cost string. So this is a code that correlates to a specific expense category or a program within an organization. And we're going to use this term a lot. We're going to look at this particular concept a lot. This is basically how you convert your program language into number language. And why this is important is that, let's say you have a particular type of expense, like your instrument purchase for your program. You will have a kind of a number code that correlates to that type of expense. And the reason that you have a number code is so that you can actually, in a kind of analysis, pull all of the expenses that correlate to that code and see over any period of time, 1 year, 2 years, 3 years, 5, how much you're spending on that particular category of expense. But if you don't have that cost string, it makes it very hard to go sort of like hunting for those individual expenses, right? So it kind of groups them in a helpful way that facilitates analysis. Pedro, I saw a question pop up. Would it be good to pause?
It is not related to the basic vocabulary covered here, but I think it's to Leah's last session. Mira asks, how can you best calculate the surplus of your project the surplus if your project hasn't started yet?
If your project hasn't started yet, so how would you have a surplus if the project has not started?
I believe so. Mira, are you asking in relation to the assignment? Could you be a little bit more specific? Maybe if you
Yeah.
unmute yourself.
Hello.
Hi, Mira.
Hi.
Hi.
Yeah, I think I'm very new in this topic, like everything that has to do with budgeting and all this. So I apologize if my question is a bit
Oh,
can be a bit naive.
no, that's okay.
No, I was just wondering, like calculating and making this perfect budget presentation. I was wondering, just calculating the surplus or just including it in the budget list. I don't know how I can include that when I don't have the exact numbers yet, when I don't have the experience
Right.
yeah.
No, it's a good question. So I think you would not include a surplus yet before the project starts, because unless you were, yeah, I mean, a surplus basically means that you have funds left over from a particular budget cycle, whether that be, annual, or maybe your budget cycle is, 6 months, or, however long it is. You have money left over that you're bringing into the next cycle. So that sort of presumes that you're already through one cycle, annual, let's say, for your project. And at that point, you would start reporting on the surplus or the deficit, the money, owed, that you're bringing into the next cycle. Does that make sense?
Yeah, totally. It's just in our assignment, there's like business canvas that we have to fill out, and there's the surplus inside. I was just wondering if there's a way to include it before it exists, to make the presentation even more efficient or effective.
Yeah, no,
I guess, yeah.
I don't think so. I mean, at least to my mind, until you're in a project, it's hard to have a surplus. But Pedro, if there was something that was meant, for participants to include there that I might not be aware of, please chime in.
No, I think the closest to surplus that I can think of when looking at the drafting of a project could be represented in sample budget C inside the sample budgets that we provided. So I'm looking at it now, but I'm just going to try to verbalize. If you can pull it up as I speak, that would be helpful. So as you can see in the startup budget, there is a few outflows, startup outflows for this South American festival that seems to be about piano. So you have initial outflows like tuning, rent, marketing, flight tickets of the teachers, and prize for the competition's winner. And there you have total startup expenses that equal an amount. But then when compared to the total investment for the startup budget, you have a funding overage. So this is not a surplus, but it's a funding overage. I don't know if this is a way in which you could envision this balance between money in and money that you're envisioning to see out in your startup budget.
Right.
Does that help?
I have to be honest with you, I didn't understand, but I will try to.
Sorry, do you have the example pulled up?
I'm still looking. It was too quick for me to go in
Let
and
me try
find
one
it.
more time, but do you have it in front of you?
Yeah.
Okay, sample budget C, correct?
Yeah.
Okay, you see that at the beginning it says startup budget and then investment funding revenue. So this particular enterprise have $22,000 as total investment funding. Do you see that number?
Yeah.
Okay, and then right under you have startup outflows. So all of the things that are necessary for this project to become alive before the project actually takes place as its first iteration, which would be the operations budget that's below. So as you can see, if you compare the total investment funding, $22,000, with the total startup expenses, $12,600, Then, right under, you have a funding overage. So you have more money that is being invested than the total expenses that you will have in your startup.
Yeah.
Does that make sense?
Yeah. I understand what you mean. Yeah.
Okay.
And so I think in that case, it would be important just to make the distinction that that's a projection, right?
Mm-hmm.
That you're projecting that you will have more funding than you will in fact need. But until you go through that first year, you can't really have a definite surplus. Like a surplus is money that is left over that, after all of your actual costs are accounted for.
In terms of terminology, Eva, is it common to see that overage is when we're talking about projection and surplus when it's or is that not? Okay.
I think so. I mean, one thing I will say is that there are, depending on what sector you're in, and by sector I mean nonprofit or for-profit, some of these terms are kind of interchangeable, or they're like, even within different fields, there are preferences for, terms for different concepts. So for me, yes, I would say overage in the case of projected budget, and surplus in the case of actual, but it may be different in different sectors or fields. So that's just something to be aware of. If you're in a new environment, sometimes you may have to kind of adjust the terms that you've known in the past, depending on what the practice or kind of language of the particular organization, sector, or field is.
Great, thank you very much. I wish I could have your mind for 10 days, but that can't happen. Thank you very much.
Yeah, absolutely. Okay, well, continuing on, depreciation is another term that is, I think, specifically important for those who will have kind of high cost investment for their startup. So that might be if you're investing in instruments or other sort of costly technological materials. Depreciation will be an important concept to know about. This is basically when you have a fixed asset. So let's think of a violin as an asset that over time experiences wear and tear. Depreciation is basically an amount, if you're a nonprofit, that you can write off as an expense for tax purposes, because basically the value of that fixed asset is decreasing over time. Now, this is something that won't necessarily come up in your day-to-day accounting practice, but this is something that you should know about generally for tax purposes, and certainly you would get advice from a professional tax accountant who could ensure that you were doing this correctly for your particular situation and organization. But this is an important term that if you do connect with a tax professional, to file taxes at the if you are a certified nonprofit, and again, it's different for every country. This is something that you will hear and is important to understand. Great. A really important term that I think came up even in our first session, and I know came up in Leah's intermediate sessions, is in kind. So this is a contribution that is non-cash, but has value. So it could be volunteer labor, professional services, a donation of space or other materials. And this is a very important sort of way to structure, or to cover your costs, essentially, especially when you're starting out, right? So you're going to be thinking of lots of ways, like, how can I generate in-kind donations? How can I cover costs, through partnerships and other, and other, in-kind contributions. So I'm going to show you very quickly a way of how you can structure this into your budget, because I know that there are a lot of questions about what this looks like. Since it's a non-cash value, how does that get baked into your budget? So excuse me while I switch screens here. So this is the Clinton Global Initiative University, and they have a sample budget that I think does this very well. If you see in the revenue side, they have, grants, corporate contributions, in-kind donations, endowment, individual. So they have all the different kinds, right? And they total it. But then they sort of break out the in-kind to show that amount. And the reason for that is because it's non-cash, it's important, for a funder or other partners, and also for your own thinking to understand, okay, like how much of this is, dollar and cents, like in my account, and how much of this is an in-kind, value that I'm getting, but not actually revenue that I'm going to see in my account. And it's also important for funders to see, okay, well, really your operating budget is $25,000, but you have in-kind of an additional $10,000. But I should think about this person as having an operating budget of $25,000. So it's important to break out, and you can do it in a number of ways. I encourage you, to look at different examples, and I'm happy after this session to provide some additional examples and ways that you can format it. But this is one way of doing that. And if I scroll down here, it shows you also on the expense side how you can break out the in-kind. So basically you're showing, subtotals, if you will, for in-kind, and then the overall expense. Any questions on in-kind? This is a very important term and concept, so I want to make sure that folks understand it well.
There's nothing in the chat box as of now.
Okay.
But let's give it a couple seconds in case there are questions.
Okay, wonderful. And I'll just toggle back to my screen. Sorry. Okay. Great. An income statement is a summary of revenue and expenses of an organization. Yeah.
There's one question.
Sure.
Daniel Smith asks, so in-kind expenses are services that your organization is donating?
No, that are donated to the organization. Mm-hmm. So let me give you an example. Let's say you have a new opera company, and you need to hold rehearsals once a week, and the local conservatory has said that they will donate rehearsal space. Essentially, they will allow you to use their rehearsal space for no cost. So this would be like that would be an in-kind contribution to your organization. It's something that if you had to go out and find a rehearsal space, you would pay money for, but the local conservatory is giving you free of charge. So it does have value, it has real value, but you're not actually paying for it directly.
Is that clear, Daniel? It's an important concept to understand. So if anyone else has any questions. And follow-up question from Daniel. Can you redefine the difference between income and expense then?
Do you mean in relation to in-kind donations or just generally? Oh, great. So let's actually, well, I'm not sure actually that it's helpful to go back to the example. So basically, it's a little bit fluid, and I think that what you've hit on is maybe a little bit of a gray area. But what I think is helpful is to think about, like, where would the expense or revenue fall in your budget if it were real money, right? So in the case of like a space or I'm trying to think, or an instrument, right? That would kind of fall in your expense category. So you would put it there. And then the reason that you then put in kind in the revenue is because it has to equal out. So if you just put it in the expense category, you would have a lot more of an expense than you did revenue, right? It would start to make your expenses bigger, and your revenue, that's real dollars, would not would not equal that. So you sort of put it in both categories so that they're kind of canceling out one another, if you will. Does that make sense? I feel like I didn't explain that in the clearest way, so maybe I should go back. Okay. Others understood that. So basically, you know, the in-kind donation is sorry, I just saw another question come through. The in-kind contribution is going against what otherwise would be an expense. So you're showing that in the expense section, and then you're reflecting that in the revenue section so that they cancel each other out.
Yes. We have one question coming in from Gabriela.
Yeah.
It says, as I understand, the surplus is the same as carryovers, but the text says we should not include carryovers in the following year's budget.
I'm sorry, that you said the text says?
Gabriela, could you be more specific regarding that? What text? Are you referring to the preparatory activities text? Or the text on the slide? Preparatory activity.
Yeah. So I think that's, again, as I spoke of before, it's sort of a question of preference, and you know, different fields or sectors will recommend different things. I think typically it's true that in an operating budget, you know, you're not sort of showing like surpluses from the previous year. It's more of like, if you make like an income statement, sort of the broad, like, what is the financial picture of my organization? I'm showing that I have, you know, these assets that I'm carrying over from year to year. An operating budget is really about direct expenses and income, but a financial statement, like an income statement, would show surplus or deficit that's getting carried over year to year. So that's, I think, you know, in the text, what they're referring to, kind of, they're really an income statement and a budget are really kind of two different tools. One is more internal. It's really an operating tool for you know, financial team and organizational leaders, whereas a budget is, of course, also an internal tool, but it's an external tool as well. Does that answer your question?
She says yes.
Oh. Uh-huh.
And Hannah has a follow-up. She says, sorry, just to clarify, if someone offers a discount rate to our organization for a service, do we put the full amount that we would have charged in the expenses and then pull out the percentage saved for the in-kind column?
That's a great question. So it depends. If the organization is giving you a discount and they're saying, we are donating to you, let's say the expense is a $2,000 piece of recording equipment, and they're going to sell it to you for $1,000, and they say to you, I'm selling this to you for $1,000, and the other $1,000 that it normally would have cost you is my donation to your organization, and I would like documentation that I made this donation, you know, for my own tax purposes. Then you would structure that into your budget because they see it as a donation. If you go, let's say, to Whole Foods and they say, oh, you know, you're a new enterprise, you know, working in the arts and the community, that's wonderful. You know, we're going to give you a 10% discount on your overall cost. Just because we want to, you know, we do this every once in a while for members of the community, then you would not, right? So if it's just kind of like a general discount, you know, you got a good price on something, or an organization said, you know, we want to help you out, we're going to give you a little discount, you would not. If it's significant and if it's presented as if it is a donation, an in-kind donation, then you would. I hope that clarifies. It's a really good question.
Thanks, she says.
Yeah, great. Wonderful. Okay. So moving on to the income statement, as I mentioned just before, this is a summary of revenue and expenses during a particular accounting period. So this is going to be kind of like the high-level picture of flow of money in and out in a particular accounting period, and also may reference surplus or deficit that's getting brought over from previous accounting periods. Also, this can be known as a statement of activities or profit and loss statement. So this really goes to the point of like terminology can be interchangeable, and that's what sometimes makes it really hard and to be kind of fluent in this space. But you will interchangeably hear income statement, statement of activities, profit and loss, or P&L even, which is an abbreviation of profit and loss statement. So good to kind of have those terms buzzing in your ear. Indirect costs, which I know Leah spoke about, these are costs that cannot be traced back to a particular program, but are vital for the health of an organization. So this might be fundraising staff, management salaries, occupancy, other infrastructure. And so in your budget, when you sort of move beyond just creating organizational budgets and you're creating program budgets. So maybe you're going to a funder to underwrite, a new initiative, and you want to send them a project budget in addition to your organizational budget. You would tie in some of these indirect costs, as I know that Leah went over with you, so that you're ensuring that you're covering those really important areas of operation that, are supporting the program, but are not directly related to it per se. Wonderful. And object code is another term that's very related to the cost string. So a cost string will be kind of like a series of numbers. The larger your organization is, the more complex that cost string will be. It'll reference kind of many different accounts and expense categories. The object code will be like a set of numbers within that relates to a specific expense. And don't worry, I will parse that further, but in just a moment. But object code is generally the piece of that string that relates to, the expense category, like food or travel or I'm trying to think of another, supplies, things like that. And finally, the last term that I really want you to feel comfortable with is variance. I know also Leah touched on that in her session. So this is basically the difference between the amount that you budgeted and the actual amount spent. And this is expressed in a percent. So it's essentially, what is the difference in percentage. So did you budget 20% under or 15% over? And it's just a helpful tool for you to understand kind of how accurate you are in the projection of your expenses and revenue. If you're seeing really high variances, then that might be a cue that is, telling you, wow, like I really need to kind of revisit the way that I'm thinking about my cost structure or my revenue model because I'm really way off here. If you have a pretty tight variance, then you might say, okay, like I really understand well my expenses. I'm able to project them very, very clearly, very accurately, and you're in good shape. I would say it's typical to have, a 10 to 15% variance, sometimes even more, but that's very, very typical within an organization. If you have a positive number, that means that you spent more. If you have a negative number, that means that you spent less or earned less than you thought. So you'll see positive and negative variances. So I'm just going to pause here for a second because I threw like a lot of terms out there at you just to see if there are any questions on these terms before we dive in to some of the actual nuts and bolts of accounting for your organization.
Nothing yet.
Okay.
In the chat.
Nothing yet.
Let's continue.
Okay, great. So here's the question that you're probably all asking yourselves. I only have one of me, or maybe there's two of you. In a small startup, how do I effectively track income and expenses? What are the tools I can use to do this so that I don't get overwhelmed and that I stay on top of this activity? So the first really important practice is creating a system for paying invoices. So this means, any type of expense that you're incurring, you need a system for paying that expense, right? The first question that you want to ask yourself is, will you establish a small business account for paying invoices and collecting fees or donations? I highly encourage this because I think kind of commingling of funds between your personal and your project is ill-advised. Certainly if you're established as a nonprofit in the United States, you cannot do this. You need a separate account. But if you're sort of working in that startup phase where you're not yet an established entity, you sort of have a choice. And again, this will be really different depending on where you live, but this is a really important thing to investigate. And I would encourage you, wherever you are, to take a trip to your local bank. Sometimes small business banks or charter credit unions can be great for this, and just walk in and say, this is my startup. I'm interested in opening a small business account. Can you walk me through my options? The next question that you need to answer and kind of establish for yourself is, what information or documentation will you require from each vendor? And when I say vendor, that means any person that you're working with, whether that be a photographer or a caterer or someone who does sound and AV for performance. When you pay them, you're going to ask them for documentation, and you should create a system for which documents you require. In the United States, you would use most likely what's called a W-9, which is where they give you their tax reporting information. You would be very advised to build a contract and have sort of a template for use with different vendors. And then you would require them to submit an invoice. And an invoice is really just a description of services and the cost of those services so that you can pay them. The next question you'll ask yourself is, what is your timeline for paying invoices? Typical industry standard will be what they call a net 30, which means 30 days. So from the day that that vendor gives you their invoice, from the day that it gets paid, should be no more than 30 days. But depending on the types of vendors that you work with and also just your capacity, it might be different. But it's very important to sort of communicate those expectations up front with your vendors. So, if they are expecting to get paid in, 15 days, but you're only able to turn it around in 45 days, you want to make sure that they're aware of that and that that's acceptable to them. And then, how will you report income earned by individual contractors or staff? So it's likely that you're going to be working with, teachers, performers, photographers, videographers, sound people, whatever it may be, who are not full-time staff for you, right? They're coming in for some portion of the week or some one-time event. But in the United States, for example, if they earn more than 600, you're required to report the money that they earn. So you want to get advice from a tax professional about how you will report this income and the best practice for doing that. And I won't go in depth here because it's going to be wildly different depending on which country you live in. And anyway, it's also very specific to the type of organization you have, how you've set up your business, etc. So it's just important to get that advice from a tax professional. But know that in many countries, it is a requirement that you report any income earned by individuals who are working with you or for you. Great. So this is sort of goes over systems for money going out of your organization. Any questions here? Okay. I'll keep going, but stop me if you do. A sort of related piece there is processing reimbursement. So you yourself may be laying out money that will be reimbursed to you by your organization. You may be working with others who are laying out money that need to be reimbursed. So again, what information will you need in order to process that reimbursement? Will it be a scanner of the receipt? You know, a form that you might create? There are many, many templates online, and I can provide samples as well. What will the timeline be for that reimbursement, and how will you retain those records? Are you going to have a digital filing system? Will you have a physical filing system? So these are all kind of systems-oriented questions that you need to answer for yourself. It's really nitty-gritty, but I think if you set out at the beginning and say, you know, this will be my filing system, this is, you know, the set of documents that I require for reimbursements, for paying invoices, it'll start to be automized, right? You're not thinking about it every time. You have a clear system in place, you know where things go, and you have clear records. And most of the time, you know, you don't need to fall back on those records, right? They're just there, you know, as sort of a historical document. But if an issue arises, you know, you have that documentation, and it can be really critical that you have saved it. So I really highly recommend creating some sort of, you know, clear system for money going out of your organization. And then how do you track income coming in and also expenses going out? So we know that you have your budget, right? Like that's kind of the roadmap. That's what you say at the beginning of your, you know, cycle, whether that be the year or, you know, whatever period of time you've set. This is how much I expect to spend, but then you have to track how much you actually spend. And so I'm going to kind of walk you through a system for creating basically a ledger, is what I call it, where you can track all of your expenses by code. Maybe better word to use is journal. That might be more familiar to most of you. And so you'll create object codes for each of the different types of expenses that you have that then build into a more complex cost string across separate programs. So I'm going to show you an example of this. Okay, so this is just like a made-up cost string, but basically it has three component parts. It has the department, so that might just be your organization. You say like, okay, my organization's you know, lead code is going to be 111. It's kind of arbitrary, but let's say down the road, your organization grows and you have many departments in your organization, then you would want to have different numbers for different departments. And then maybe you have 3 programs that you're running. So each program has a unique number. Your education program is 2222. Your jobs training program is 3333. And your new music ensemble is 4444. Maybe it's a little hard to imagine how all of those programs would exist under one organization, but this is just a hypothetical, right? And then the expense category, that object code would be the last thing in that string. That would be 1, 2, 3, 4. Okay, so you have this string that's made up of component parts, and it basically is like a roadmap that leads us back to where the expense originated, in what department, related to what program, and then what type. And what this allows you to do is really analyze your data. So let's say at the end of a budgeting year, you want to know, like, how much did I spend on food the whole year? Well, you can go into your Excel document and you can tabulate, you can add up all of the expenses that relate to that category 1, 2, 3, 4. And then you'll see, wow, I spent $2,000 on food out of a $10,000 budget. I spent 20% on food. That seems extraordinarily high. I really need to adjust, right? So it's that kind of high level data and information that can really help you make adjustments and strategic decisions going forward. Any questions? This is pretty technical. So I want to just pause. Okay. Hopefully this means that it's all just super clear. Okay, so I want to walk us through an example of an income and expense journal. This is what I was referencing before, so so you can see how it looks in practice. Yes, I saw a question pop up.
That was me. He says, is each expense category a different number or a different series of numbers?
Yeah, so each expense category, that object code will be a different series of numbers. So if we go back to this page here, like material, office, and supplies would be 1, 2, 3, 4. Books would be 1, 2, 3, 5. Food would be 1, 2, 3, 6. Office space rental would be 1, 2, 3, 7, right? What would be probably more uniform is the program or the department, right? That would apply to a lot of different types of expenses that come through your door, but the category is what would be the most variable.
Mm-hmm.
Okay. So I need to pop out here for a second. Okay. So I'm taking us into an Excel document here. And this basically shows how to build a journal, an income and expense journal based on your budget. So in the first screen here, I have what is a normal budget, right? We have our revenue and our expense, and each different kind of expense exists here. And you see to the left, I have an object code for each, right? So each type of expense I have in my organization has a correlating object code. And then below, I have a really important section, which is called assumptions. So this is where I describe, for example, let's say I have a total of $1,500 in FY18 for my staff salaries. So I would say that that is based on the assumption that I will have 2 teachers providing lessons for 6 students over 3 months. It's not accurate, but I'm describing the assumption that I've used to get to that figure. So this is where, not only for you, but also for funders and any other partners who might be looking at your budget, you have this really rich information that sort of tells the story of that, you know, simple number, right? It helps them understand what assumptions you're using. Now, we have a second document that's kind of like our internal working document, which is an income and expense, okay, journal. So this basically has sections for each code. So you could input an expense, let's say March and April here. I paid $1,000 for a teacher salary, and I paid $500 for a teacher salary. And then you can pull that back into the actuals of your budget. And I'll show you using a really simple Excel function how you can do that. Let's say, so you just, you know, every time you have another expense, you just create another cell here. And so let's maybe move this up. Okay. Let's say this was the staff salaries. Let's say maybe workshop leader for youth orchestra in May 2018, and that person got $750. Okay. And then I want to total it here. So you see I have a nice function, sum, and then I just pull all of the things that I want to sum together. Let's try that again. And I will send you a list of all of these functions because they're very helpful. Equals sum, and I drag over all the cells I want it to sum, and it gives me a total here. Now, if I go back over here, voila, there it appears, my 2,250. And this is my actuals. I'm going to just go into this cell for a second to show you what the function is, but again, I'll send this as a follow-up. Basically, you're creating a reference point in this document back to your journal. So if you see up here, it says equal in parens, income and expense journal, which is what this tab is called, and the paren with an apostrophe, exclamation mark, and the cell. So this cell here is H25. So I'm basically telling Excel, pull that number over from the tab and put it in here. So this is basically what we call like a roll-up, right? These are all of the individual expenses that then get rolled up into that cell in my budget. So I can now look at the difference between what I budgeted and what my actuals were. And that's going to be constantly changing as expenses come in. So every time I pay my staff, their salary, every time I have any expense, I'm just going to go into my expense journal, put it under the proper code, and then I'm going to make sure that it's referring back to my actuals in the budget, so that I'm getting this really dynamic picture in real time of how much I've spent in each category and how much, excuse me, how much it deviates from what I expected to spend in the first place. I'm just going to stop there because, again, this is pretty technical. Any questions, or would people like me to do a few more examples?
Let's maybe ask for positive feedback. Is this clear? Just to give a sense, write a yes in the chat box. Or if you have more examples, then please type more examples would be helpful. More examples would be helpful. Okay, why don't we do just one more before we continue?
Great. Okay, so if we look at the next category, food, I will go here, and I have 3 expenses. Lunch for a staff meeting, and I might put a date, let's say today I had my staff meeting and I, spent $54. And then on the 1st of February, I had a post-concert reception, and that cost me $254. And then snacks for my after-school program in January for the whole month cost me $315. So here I'm totaling it, right? I have my, I'm just going to delete this so I can do it from scratch. I have my equal sum, open parens, and I'm dragging all of the cells that I want to add up, giving a close parens, and that gives me my total. Now I want to go back and pull that figure into my budget, right? So here it is. And if we're looking at what is the formula that got us there, and I'm telling Excel, go to this tab and pull for me the figure that is in H30. Now, I don't know what actually the exclamation refers to. This is just like the pre-form Excel function that will do this. I don't actually know why it's an exclamation mark as opposed to like anything else, but this is the formula basically. So the equal in apostrophes, we have the name of the tab, an exclamation mark, and then the letter and number of the cell. And if I press enter, there it is. Let's just add one more expense, and then it should change. So maybe I had a donor lunch on the 15th. And that was $65. And now my total is $689. And if I go back over here, voila, there it is, right? It's automatically pulled that information. Great. I saw a really good question about object codes and when to create them. Do you want to read it out loud,
yeah.
Pedro?
Sophie says, sorry if this has already been addressed, but would we be expected to create object codes before we begin operations, or would they begin to materialize as and become clearer as time goes on?
Yeah, so I would recommend doing it before. It is a dynamic thing in that, you know, maybe in your first year of operation, you only have a certain number of like expense categories. So you won't necessarily need, you know, an object code for, let's say, technical services, right? And then in your second year, you say, oh, wow, no, actually, you know, we needed someone to record a performance, and that goes under technical services. And so now I need that object code, so I'm going to create it. So it is iterative. It doesn't necessarily happen all at once, but you should start with all of the expenses that you know or expect to have in a given year, create object codes for that. And if you need to add as you go and as your operation changes and grows, that's absolutely fine. You know, organizations do that all the time, right? They get a new program. Usually it's not so much in the object codes and the types of expenses because they've pretty much created codes for like all the expenses you could think of, but sometimes new ones come up. It's usually for programs or departments, right? You might start a new department, you might start a new program, and then you need to create a new budget string for them, or maybe you have a new type of activity. So it's not like you create it all to begin with and then you never touch it again, right? It is more iterative. It sort of evolves as your operation evolves. Really good question.
Eva, we have two questions. One coming from Gabriela. She's from Netherlands, and she says, within the context of nonprofits, you have to get your budget approved by the board. Now, what if something happens in the middle of the year that changes this budget? For instance, if you suddenly get funds in the middle of the year and your budget changes, how do you go about this situation? Do you go back to the board? Can you change a budget that has already been approved?
Yeah. Great question. So it really depends on what that change is. If a change is like, wow, we got, you know, $1 million grant to do this exciting new program that we know that our board is generally interested in executing and is aligned with our priorities, then no, you wouldn't have to like go back and reapprove a budget. In any way that would have implications for down the road, right? Usually if you get $1 million budget, like maybe you might start some of the work immediately, but it's going to have more implications for down the road, for next year. If there's a case where you have like a really unexpected expense and you don't have money to cover it and you're going to need to divert funds from another area to cover it, then that's usually the type of thing that you would report to your board. Depending on kind of the way that like finance bylaws that you create for your organization, that means like the laws that govern the financial management of your organization and how the board sort of executes those, then you may have to get approval, they may have to vote on it, or they may just need to be made aware of it. It'll depend on each organization. Generally, like your board should be kept abreast of you know, financial updates, and any board meeting generally, if there's fiduciary responsibility of that board, that means if they have ultimately like financial responsibility for the organization, meaning like if you have big debts, like they will be responsible for those debts. Usually there's a finance update that happens at any board meeting, and so you might use that as an opportunity to update your board on significant changes. Did that answer your question?
He says yes.
Great. And you said there was another question, Pedro.
One more question. Daniel Smith, how did you create the income and expense journal tab within that document?
Yeah, great. Really easy. So do you see this little plus over here? If you press it, it'll create a new sheet. If you double click, you can call it whatever you want, like the hello tab, and that will create a new tab. Oh, sorry. And then similarly, let's say you don't want your hi tab anymore, you can right click on it and then just delete it. And you can create as many tabs as you want. So let's say you want all in one Excel document, your income and expense journal for 2008. Right? Maybe you also want to reference your income and expense journal for FY17, your financial year 17, right? So you have those figures kind of readily available all in one document. Great. Okay. So I do want to quickly cover variance because it's an important concept for you in your operation and planning. So here we see what did I budget for staff salaries? Well, I budgeted $20,000, and my actual for the full year was like way less than that, right? I only actually spent under $2,500. So that means that my expense variance, the difference between what I thought I would spend and what I did spend, is $17,750. So now I want to express that as a percentage. And if you go here, you'll see how I came upon that. So the function is here. Sum is this total amount that I budgeted divided by the difference between what I budgeted and what I actually spent, and that gives me my percent variance. So that's the formula for how you come around, how you get from the expense variance to the percentage. And the reason that the percentage is helpful is, like, if I were to just, I'm just going to hide this here. If I were to just look at the expense variance column, like, that doesn't really tell me very much. Okay, like, yeah, that's a pretty big number, but as you get, into bigger and bigger organizations, like, that could actually be very little expense variance. But the percentage is what tells me the story. It tells me that I was way off, right? Like, I was 89% off in my projection. And so that's why we express it in a percent. Here, in the food, I spent $2,500. I budgeted $2,500. Let me open. Come on. There we go. I budgeted $2,500, but in fact, I only spent, a little under $700. So my variance is around $1,800. And again, I'm looking at, oh, this is the wrong formula here. I'm looking at the budgeted versus the expense variance. Sorry. So I will put sum budgeted over expense variance. Is that giving me, sorry. I see. That's what I did wrong. Sorry, guys. Okay, so it's telling me 72% in variance, right? Still pretty big. Yes, how wildly delusional you were in your first instance. Let's say you had airfare you projected pretty well at, like, $700, and you actually spent $650. Then the difference between the two is very little, and then your percent will also be very little, right? And let's turn this into a percent. Yeah, only 7%. Okay, so hopefully the variances will be much smaller. And again, this is just a way for you to understand kind of where your where your projections are hitting or not hitting the mark. Okay. So sort of to wrap up this this session, the last piece that's really important is sort of deciding on a reporting schedule. So, you know, this data is only going to be so useful to you as you look at it and really analyze it on a semi-regular basis. So for most organizations, that's going to happen on like a monthly or a quarterly basis. But you can decide to do it, you know, on a different interval. I wouldn't recommend waiting more than, you know, 3 to 4 months. I think that, you know, will give you a good sense of like how you're progressing through your year, and whether you need to make adjustments, you know, in the middle. But that's another, you know, thing to establish. And I would really set aside time, you know, at the beginning of your year to do that analysis, and create those reports, both for you and for any other team members that are affected. So with that, I want to leave, you know, the last like 15 minutes or so for questions on this material, but also any questions that are coming up as you are developing your budgets, and maybe we can address you know, some individual questions there to help you. Yeah.
Hannah says, just an assignment question. For our budgets, can we use our own country's financial year, or do we need to Americanize it?
No, I would use your own country's financial year. You might just include in a note, you know, what that year is. So if, I don't know, if it starts in September and ends in August or whatever, just so I know. But yeah, I would say don't Americanize it if you're going to be using the budget in your country. It should follow that timeline. It's April 1st. Okay, good to know. Great. Good question.
I have a question coming in from Gabriela.
Yeah.
But Gabriela, would you be able to unmute yourself?
Hello, does it work?
Yes,
Yeah.
it does.
Oh, great. Good. I feel like completely cut off because I can't put the webcam and you can't see my messages in the text box. But good that the microphone works. Okay, I have a super individual question directly for my program. I have a program with my sister in Denmark, and it started 3 years ago, and we were doing everything, all the administration and everything related to money. But since August, the program was adopted by the local music school, so we don't take care of anything with the salaries anymore.
Okay.
We don't even see the money.
Okay.
So my question is, should we in the budget have the salaries in the budget anyway, even though we don't see the money? Or should we leave it out?
That's a great question. Maybe I need to know a little bit more about the relationship with this school. So all other expenses aside from the teacher salaries, you still take care of?
Yeah, we do all the fundraising for if we go travel with the kids, for example, or if we do concerts or anything. We do everything else on salaries, and we have a contract with the music school, so we are employed by the music school.
I see. Yeah, that's a really interesting question. So you're essentially like a contractor of the music school.
Yeah, basically, yeah.
Okay.
But they can tell us at any time, we don't want to help you anymore, and then we have to fund the money from somewhere else.
Right. Yeah. So I'm almost wondering if like an in-kind donation makes sense.
Okay.
It's not exactly in kind because they're paying for it, but again, it's not money that's kind of like flowing in and out of your account or your organization. So you might, I mean, they are essentially contributing that money. So it's not even really in kind, right? Like that's money that they're paying. It's just money that's not flowing through your operation. So you might put it in the revenue, like that's actually considered revenue. Let's say they're paying $20,000 a year in teachers' salaries. That would go in a revenue line, and then it would also be expressed in your expense line. But it's kind of quasi in kind, but it's not, right? Because they actually are paying the teachers.
Yeah, exactly.
Like in kind would be if the teachers were donating their services, right? No money was changing hands, but here money is changing hands. So I think that's how I would recommend dealing with that.
Okay, great. Okay, thank you.
Yeah.
We have a question coming from Maggie. She says, sorry if I've missed this, but are there concrete examples of these budgets in certain formats, like an example of an education program budget, an example of a healthy chamber ensembles budget, etc.?
Yeah, so there were a number of different budgets that were posted to give you an idea of different formats. I'm also going to share after this webinar this Excel document, which you can adapt, right? So this has kind of all the different categories for expenses. So certainly if things aren't relevant to your project, you can take them off, but this will be like a good place to start, hopefully.
Thanks.
Yeah, absolutely. Any more questions?
Question from Fraser. He says, if it's a one-off festival that I'm budgeting for and I don't need a full year thing, can I leave bits of the budget out? It's not a system-style week-to-week thing, more like a one-time event. Maybe if it goes great, then I should try it again next year.
Yeah. Yeah, so I think that for the purposes of the assignment, but also just what I would recommend to you outside of this assignment, if I were just like advising you generally, is that you would create a startup budget, which essentially is kind of like a project budget, right? It's like a pilot for this organization, which is this festival. You don't know if it will continue or not, but you're trying a pilot. And so you create the full budget for that pilot. And then for the purposes of the assignment, we're also going to make you do a next iteration. Even if you're not sure that you're going to do that, we want you to kind of think through what the budget would look like in year 2. Does that answer your question? I think I wouldn't leave any parts of the budget out because all the expenses and income categories like still make sense, even if it's just a pilot and you don't know if it's going to continue. Great. Great. Excellent. So, just to kind of recap and close, and if there are any more questions that crop up, please send them in. I just want to encourage you to get kind of nerdy with this stuff, like just play around, get comfortable with these formats, get comfortable with these Excel functions. The more familiarity and comfort you can build with these tools, the better your financial practices will be for your startup, the more on top of the flow of money in and out you will be, and the less that it will kind of control you and consume your time, right? I think we all know from like our personal budgeting and financial lives that when we're really not paying attention to what's happening, things get kind of out of hand, right? Like either we're spending way too much or we miss bills, or like, bad things happen. The same is true in an organization, right? If you have kind of like scattered financial practices. You're not on top of things. You don't know when money is coming in and when it's going out. You don't know how much you spent in different areas, whether you're on budget, whether you're not on budget. Like, bad things can happen, right? You can overspend. You can, really make, partners angry. You can miss out on important funding opportunities because you don't have clear financial, documents and information. So it really does require, investment of time and care. And I think, we often sort of tell ourselves as musicians, like, oh, numbers, like, I'm not so good at that. Like, that's for, people with different kinds of brains. I have a kind of like creative brain. I do not agree at all. I think that musicians are actually like really fabulous at this, because if you think about sort of the detail and precision with which you play your music and all the details that you pay attention to, like, this is the same thing. It's just in a different format and in a different vein. And so I just really encourage you to bring that same precision and, like, duty and investment, maybe not the same, but the spirit of that, to this work, and it'll really pay off. You will build skill in this area. Your operation will run smoothly. Partners will feel that you have a credible entity and that you're trustworthy, and that you are in the know about this piece of your operation, which is so critical to success. So I hope that this series you've really come to both understand the big picture concepts of kind of what goes into building budgets and financial models for organizations, but also today, you really like the nitty gritty, like, what does it look like day in and day out as you pay things and get money in the door? Like, how do you track that? What kind of practices can you put in place so that you always have access, to the information and can use it to drive decision making?
Thank you, Eva.
Yeah.
I don't see any new questions popping up in the chat box. Please note that Eva and I are available via email if you have any further questions about your assignment. Also, to touch on something that you discussed in your first webinar, the assignment has been modified so that there is an option to either submit a startup budget or a program budget on top of the operational budget that everybody has to submit. And there's a note there that says that please reach out to Eva and me if you would like to submit a program budget instead of a startup budget, because that needs approval from our end. But Eva, thank you so much for this year. It's been a pleasure. Congratulations on being a new mother, and I'm happy that we were all able to be flexible and adapt to the time schedule.
Yes, thank you.
So thank you for these sessions and for the planning with Leah. It was a great learning opportunities for all of us. So thank you.
Wonderful. All right. Well, I'm looking forward to seeing those budgets, everyone.
All right. Have a great night.
Okay, you too.
Bye, everyone.
Bye.